Well, hello, this is Jeremy North with your educational and economic update for January 2021. Well, first of all, Happy New Year. We made it. And second, I hope everyone had a nice holiday, stayed safe, got to visit some family, and I really look forward to seeing everyone hopefully this year, God willing. Well, in this month's video, I will discuss major headlines that influence markets in December, the fourth quarter of 2020, and kind of touch on the entire year. So please stay tuned at the end of this video for the always exciting required disclosure statement. Well, stocks were up in December as multiple COVID-19 vaccines came out and a new fiscal stimulus bill was signed. So those were positive signs. The market reacted by the NASDAQ led December with a positive 5.7% return. The S&P was up around 3.7%. The Dow Jones was up 3.3%, and the 10-year Treasury was up almost 1% for the month. Well, after the election, markets rallied, likely due to the historical outperformance of a divided government, at least at that time. And we're also helped by what are some are calling a beginning to the end of the pandemic. Multiple successful vaccine trials and their subsequent rollouts, the news came out in December there. And that all wrapped up kind of one of the most crazy, tumultuous years we have seen. The S&P ended up for the year about 16.26%, after being down almost 35% earlier in the year. So that's a large down and up. The Dow ended up being up around 21.8%, and the 10-year Treasury was relatively flat, but with about a negative 1% return for the year. Internationally, stocks and bonds performed in basically a similar fashion in both December and the entire year of 2020. Still, many economic indicators are sluggish as the pandemic continues, setting records for both infections and deaths. Optimism that the vaccine will work to end the pandemic are fueling and keeping the markets going. However, some areas like retail sales were negative because of the consumer spending due to the COVID-19 was down, and because of a lot of the lockdowns in certain areas of the country. Existing home sales showed its first decline in 6 months. On a positive note, industrial output was up as manufacturing and durable goods orders increased. Well, the Federal Reserve's Open Market Committee said they will continue to purchase treasuries and mortgage-backed securities until they see progress in meeting inflation and employment goals, which may not happen for a few years. So what does this mean? Well, for us, it means that interest rates should remain low for the foreseeable future. The Fed wants higher inflation, but also lower unemployment. To this end, buying bonds helps to keep interest rates low, thus increasing the amount of money in the economy, which helps consumers and businesses alike. We will continue to monitor the markets and the upcoming political climate changes that will likely happen very soon here. If you have any questions about how the recent economic reports could impact your long-term goals, I am here to talk, and we're happy to talk to you at any time. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 636-896-4052 or 844-436-0329. We are always here and happy to talk. So with all that being said, here is the super exciting disclosure that I'm required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again, Jeremy North here, and let's have a fantastic 2021. Take care. Stay safe.